Well, did you see this? Crude reality, West Texas Intermediate. That's the oil that's traded here in the U.S., settling at $42.92 today, trading below 43 for the first time since April. So 1 minute we've got $48 a barrel, another minute it's $42 a barrel. We know that these volatile moves can be daunting to investors looking to at least get into the oil market, just dipping their toe. But today actually marks the 10-year anniversary of the ETF USO, one of the first exchange-traded funds that gave average investors the opportunity to add oil exposure to their portfolios, but with limited risk. This morning, after ringing the opening bell at the New York Stock Exchange, John Love, he's the USCF Investments president and CEO, gave Fox Business an exclusive interview. He shared his insight into the future of the oil market. Listen.
With oil itself, I think that it's going to be under pressure for a while as we're coming towards the end of the summer. Some of the optimism from the start of the year is fading, especially as drillers have come back online. We've added about 50 rigs since May. And the supply overhang that's been there is not diminishing that much. There's been a seasonal decline, but it is not nearly what I think we need yet. But as we get towards the end of the year and go into 2017, I think we'll start to see more market balance as long as there's not some other unexpected event.
Is he right? Let's get right to the floor show. Traders at the New York Stock Exchange, CME Group, and the NYMEX. Okay, to you, Elliot. I said this a million times. Too much inventory, too many rigs coming back online. I say he is right. It is going to be a rough go for anybody who wants to be bullish on the price of oil. You say what?
Well, Liz, you know that I agree with you and him. I mean, we've been on here for a while. We were talking about $49 and $50 crude, and it was sort of an obvious sell, right? When it was at 45 bucks, even American producers were saying, you know, we can't make money, we can't make money. Then they started saying, well, you know, if it gets to 40 bucks, we can. If it gets to 50 bucks, we'll start producing full time. So it was sort of like, as soon as it got to 50, you know, the industry itself would shoot themselves in the foot and slam their own market. They can't help themselves. They're still paying off loans they have to pay off the fracking equipment they bought when it was $100, right? So, I mean, they're going to keep producing as much as they can. I happen to agree with the guy. I think it goes, I mean, I was saying sell it at 50, here at 42. I think it still has room to go lower. I mean, eventually, you know, everything goes back up.
This is a classic boom bust example. They should be teaching this in Econ 101 at UC Berkeley. Where'd you go, Austin?
No chance.
Can't tell you that.
Kent State, anywhere. Teddy Weisberg, let's get to the markets. We've got earnings that are definitely driving, I guess, the price action here, but we got good economic data here. We got consumer confidence that was sort of flat, but June new home sales are at 7-year highs. I'm surprised the markets aren't doing a happy dance even more. You know, the S&P sort of straddling the flat line. NASDAQ's higher, but Dow is down.
I can't hear you. Well, I think, Liz, we're moving sideways, but we're moving sideways at the very upper end of the trading range, which is not necessarily a bad thing. And even though the popular averages are a little soft today, the tape is not, the screens are not all that bad. I mean, there's almost as much green as there is red on the screens. So, you know, it's not a bad market. It's just, you know, here we are at the end of July, almost in August, deep into the summer, just kind of one of those lackluster days.
Oh, my God. Teddy, how many times do I have to tell you, if a barn isn't burning, set one on fire? Television. I'm kidding. Larry's always full of energy. Larry, I'm looking at volatility. It's kind of soft today, but we do have it getting closer to 14. Is that a level that you look at and say, oh, maybe we might have some fear in this market? Or Treasury yields are moving higher, so it doesn't look that way.
Yeah, you know, I think it acknowledges what I think is obvious, and that's the market's in agony right now. It's not really lackluster. This is a week that could end up being very disruptive. Let's face it, we're at the apex of the earnings season. Qualitative measures from CEOs matter right now, not if we're beating earnings or beating revenues per se. We have FOMC tomorrow, not a presser, but is it going to be a repeat of October? Is Janet Yellen going to hint about a rate hike? And then we have the Bank of Japan. Remember what happened back in January? That was a disaster. And last but not least, we have GDP. So a lot of things going on. I think we're agonizing as traders and investors with a lot of things, a lot of macro concerns going on right now. It seems really quiet, but right before the storm.
Yeah, I agree. And the yen firmed today because the stimulus package that the Bank of Japan is giving isn't big enough. So that meant the dollar went down, but only for that reason. Hey, it's great to see all of you.
It's
Teddy.
all we're doing with you guys. The thing keeps going higher.
Yeah.
The crude's not helping you. Energy is down to $42, and you keep selling the stock market, and it keeps going up.
It's unbelievable.
Like, all gloom and doom for no reason.
Okay, we'll be
It's all
I really don't get you
relative.
guys.
Teddy.
It's
I was
relative.
with you 2 weeks ago, and you were saying sell it at 17.9, and you were saying buy. Whatever. Okay, I'll leave it.
Go ahead, Larry. Answer.
Selling what at 17? Well,
The
I didn't hear
Dow at 17.9. You didn't like
I
it
went
there.
underweight for this. Yeah, I went under. I'm still underweight.
Right.
The value is elsewhere. It's in emerging markets. I've gone underweight twice since 2010. The beginning of the month was the second time since then. I still remain underweight U.S. equities. The money is to be made in emerging markets right now. I would not be invested overweight in the U.S. equity market. No, sirree.
Come on.
See, the good news
I was buying Twitter at $14. They're
Larry's
giving it
in
away.
Chicago and Elliot's in New York.
Good luck. What's the return on equity on Twitter?
We'll let you fight among the
I'm not
I'm not
satellite
keeping it much
airways.
longer, but it's still
Okay.
$4.50.
Let them
Call me.
continue. Come
Call
back
me.
to me. Great.